but what I am seeing through this week's results, what I learned through this week's of results is... Alright, so before I get into this video, I just want you guys to know I'm no financial advisor, I'm nothing like that, I'm no special trader. This video is just for entertainment purposes only, and it's just a personal reflection of my past weekly results, so I can use this information reflecting on my results to better myself in my trading journey. Alright, so getting into it really quick, nothing really happened this week. I mean, like, to me, it's honestly kind of normal stuff. Like, I don't really think about it too much. I'm not, I just kind of, like, observed from a third-person objective of what's happening in the account, and I kind of learned from that. So I'm going to get into my journal in just a little bit, but basically, as you can see from the chart, I mean, for literally, so this is a full month on this account now, which is pretty cool. I've traded for pretty much a full month. And this week alone, I lost 10%. Now, 10% may seem like a lot, guys, but if you're taking it into consideration with the amount of risk that I was risking 0.15% of my account on each trade instead of 0.1%. So if I was risking 0.1% like I would have to do with FTMO, I would have only lost 5%, which, is not even that bad for a weekly perspective. But this is the type of loss that I would see on my personal account. So, 10% you can see on the chart right there, 10% there. The account balance is sitting around like 90,000, but like, guys, like, I'm not even worried about losing that. One, because it's a demo account, and two, it's like this results are the same exact thing as for my personal. I lost 10% this week on this account. I lost 10% on my little tiny account, but, which is like $5,000, but like, look, like, 10% is not a lot. Like, I only need to make like 12% to make that back. And usually with my strategy, I have a good week, then a bad week, then a good week, and then a bad week. This was a bad week. The previous week before that, I broke even. I'm expecting some sort of good week because it's towards the end of the first month of the year. The new year is over. All that volume flush has pretty much finished up, so I'm not really worried about anything. I'm not expecting anything next week either. But I just know that I just need to keep executing my strategy because I back-tested. My confidence is still really, really high and all that type of stuff, right? Okay, so far on the account, I've taken 1,275 trades. Now, take this into consideration, guys. I have a 1.1 to 1.5 risk-reward ratio, and right now I'm averaging a 40% week. Take into consideration, this was the biggest losing week I've had all month on this account, so, keep that in mind. So, these statistics are going to be skewed to a losing side. They're just taking into consideration with the confidence and understanding my strategy is profitable in the long run. This is, and also I'm a swing trader, this is 1 week of trading. This isn't 1 month of trading. I mean, I have a total cumulative of 1 month, but taking into consideration, guys, like, there was bank holidays, it was the beginning of the new year, it was Christmas time, it was just not a good time to trade. So these results, I'm not putting too much pressure onto these results. I'm not, I don't expect, I know that this strategy is overall profitable, but the results just don't show it right now because of the circumstances that happen in the market, and I understand that, and a lot of people, they seem to not understand that, and that's why they are not able to progress and get stuck with trading, is because they don't understand the times of years and, how the fundamentals affect the market, and they just kind of get stuck. But pretty much, like, the strategy right now is performing pretty much break even. Well, the win rate and statistics say that it's kind of break even. For some reason, the profit factor is less than a 1-to-1, which is weird. I don't understand that because it should be 1 to 1.5. I think the statistics are a little bit weird on here. I'm only down 3,570 pips, which, wow, that's a lot of pips to be down. But taking into consideration, I'm trading 20 different pairs. My big winners are 90 pips. My big winners take about 2 weeks to finish playing out. And all of these different types of things. So these results don't even scare me. Like, I'm not even scared about these because I understand how much I'm risking. My risk of ruin is pretty low. Now, right here, it says that there's pretty much a 100% chance of losing 10% of the account, but I have to lose 132 consecutive trades. But the thing is, like, out of 100 trades, I have a 50% win rate out of 100 trades. So that risk of ruin right there doesn't make any sense because in the long run, if my win rate is 50% out of 100 trades on every single pair I trade, it just doesn't make sense that I'm going to, I have 100% accurate, that I'm 100% chance of losing 10% of the account because the statistics and probabilities just doesn't prove that. So, you know, it's a little bit awkward. What's happening right here, this is my risk of ruin. These are the open trades that I have on the account right now. Nothing really special. Total for the month, it's quite a lot, but a minus of 13%. Now, 13%, in terms of, you know, all of the traders as a cumulative whole, 13% is nothing. I'm actually doing better than most traders because most traders would have blown the account this week, you know? So 13%, I can definitely come back from that, especially if I just keep executing and my lot size stays the same, just keep executing and I'll be fine. So now that we got that out of the way, kind of like going over the general kind of, you know, statistics of the account, like I'm getting faster and faster at it because, you know, it's like, you guys know what we're looking at, and I've done it so many times, you know, it's not really anything interesting. Now, the whole reason for this video, the journal. Okay, so what I did here, right? So what happened was towards, I think it was like Monday or Tuesday. So Sunday and Monday were not good days for me. Like I pretty much had a losing day every single day of the week. It's just a drawdown period, guys. Like literally, I don't even think about my trading anymore. Like I'm not emotionally attached. I've learned after the past couple years of doing this, I've learned to separate my emotions and myself from trading, because what would happen was I attached myself and my self-worth to my trading so much, and it put me down. Like I'd put myself down because I would lose a trade or I wasn't profitable, and I would just be like, oh my god, I'm such a terrible trader. And then I would think to myself like, oh, I'm never gonna make it, you know, I'm not gonna be, you know, at the place that I want to be, and blah blah blah, all these kind of like negative things. And after a couple years, I've learned to separate myself from my trading. Like it's just something I do. It's not, I don't attach my self-worth to it or anything. I don't think anything of my trading anymore. I just kind of do it, you know. And you know, I study it. It's something I study, but I've learned to emotionally segregate myself from that. So, you know, it was a really long process and something that was really hard to do. But I found that taking notes actually helped me a lot. But anyways, like around like Tuesday, I think it was Tuesday night, I had a lapse in my confidence. Now, I didn't stop trading because what happened, I'll get into the journal in just a second. But on Tuesday, you know, I was hitting a losing streak. So what I did was to build my confidence, because I still understood my strategy was profitable over the long term. What happened though was in my own head, I was like, oh, I don't want to execute, you know, like I want to stop trading for the week because, you know, I don't remember, like, know exactly what the emotion was, but I think it was probably a gut feeling, but I was just like, oh, I don't want to trade for the rest of the week, and I just want to study and see what happens in the market. Now, I should have listened to my gut instinct to stop trading, but you know, I kind of like sat down and had a conversation with myself around like Wednesday, I think it was, and it was just a lack of my discipline. I had a lack of discipline for like literally, it wasn't really a lack of discipline, but I sat down on my charts and I was like, oh, I don't want to do my charts, I don't want to take any trades, and it was because I kept losing, right? It just felt like every trade I was taking was a loser. And that is the time to trade. That's how you practice your discipline. That's how you need to be able to keep executing no matter what, no matter how you feel about the trade, any of that. It doesn't matter. You need to keep executing, keep your discipline, and that's what I did for the rest of the week. So I know for a fact I was aware of the psychological struggle I was having. I wrote it down, and I know that's something I need to work on, but I'm proud of myself this week because I kept executing all the way through the week. Nothing changed. I kept executing. And that's what you need to do with trading. Now, I understand this is just a losing streak that I'm in, and I don't expect next week to be better, but I'm expecting a turnaround. You know, I'm in a pretty good drawdown right now, and I'm expecting the market to perform better. What I did here was on the 12th, which I think was Sunday, I was backtesting a new idea. So 1 to 2 backtest only, aim for 33% win rate. So what I've been practicing now is I've been kind of deciding, right, because being trustworthy with a broker, that's very important to me. Like Hugo's Way isn't regulated, like Awanda is regulated, but with Awanda they don't let me split my position. Like you can only take one position at the same price, so I have to kind of have all my position size in one big trade instead of splitting it into two. And so what I was backtesting was instead of taking profit at 1-to-1 and then taking half my position at 1-to-1, and taking my other half at 1-to-2, I was testing to see, okay, well, with a 1-to-2 risk reward ratio only, like one position taking profit at 1-to-2, what's my win rate? So I'm only aiming to hit a 33% win rate in backtesting because that's break even. And so I only tested one pair at this time. I tested AUD CAD, and I actually, out of 100 trades, I got a 46% win rate, so that's really, really good. That pair is really profitable. AUD CAD is like my baby. I love that pair. The next day, which was 1/13/2022, I had an idea of the daily, like, keeping the same strategies, opening up my stop loss to 50 pips and my take profit to 100 pips. And I found that didn't work. I ended up backtesting that a little bit. And in about 30 trades, I noticed the win rate. Like, I literally went on a fucking almost 23 losing streak, like a 23 trade losing streak like that. And also at that time, I noticed that, you know, price would come down to 30 pips and then it would reverse and hit the stop loss, and trend would reverse, and it just wasn't good overall. So I'm going to stick to the 30-30 for now. That same day, I kind of wrote down in my notes to tell myself to stick to this. So daily 1 hour, 30-60, take one position and trail the stop at 1-1. This was a risk management strategy I'm working on to basically maximize my winners. It's going to be the same way my strategy performs. It's just that I'm going to be able to catch the whole move instead of just, you know, capping myself at 1-2. My whole reasoning of taking half position at 1-1 and the half position at 1-2 is because it makes a lot of sense for my scaling system, because if price is going to, you know, price would push up to my 30 take profit and then reverse down and hit my stop loss, but I'd be more likely to hit 1-2 take profit than I would to hit like 1-3 or 1-4. So it would just be easier. My win rate would be higher. It would just be more. It would be more psychologically conducive for the way that I am, just to be able to psychologically keep executing, and have that psychological edge over the market, which is what you need to have. That's the edge. It's not a strategy in terms of like the way you look at the market. Yeah, that's an edge, but the psychological edge you need to have something to be able to keep executing and executing and executing. So that was one thing. 1/13/2022. I had another idea. Same way I look at the charts. It was just adjusting my stop loss and take profit. So instead of a 30 pip stop loss, I'd have a 20 pip stop loss and then a 40 pip take profit too. And then I wrote next to that maybe even 20-60, because, you know, that would give me a 1-3 risk reward ratio. Daily 1 hour, so 30-30, 30-60. So this was just like verifying, you know, because like I tested those different things that I had, and then I came to the conclusion that what I'm doing right now is the best. But yeah, I came to the conclusion that that's the best. So what I did was I wrote that down again, and I started playing with that. And so I wrote down daily 1 hour, which is like, you know, I look at my daily for directional trend, and then the 1 hour for the break and retest. That's how I get my entry, and then a 30 pip stop loss, 30 pip take profit, and then on a second order, you know, if I'm risking 1% per trade, right, I would split the order, you know, same order at the same price, you know, 2 different orders at the same price. They both have the same stop loss at 30 pips, but one position, you know, if you're splitting the position, if you're risking 1% on a trade idea, it's going to be 0.5% on, you know, each position. One position gets taken out at 1-1, the other position taken out 1-2 if it, you know, if it pushes that far. Now, the worst case scenario that's going to come with this type of trading style is you're either going to break even on the trade, you're going to get a big winner, or you're going to get a small loss. That's pretty much it. That's pretty much the only 3 scenarios that I'll have is a small loss of 1%. You know, let's say this is risking 1%. I usually risk 0.1 to 0.15% just because of the amount of volume of trades I'm taking every week. That's like a whole new video going into like why I take so many trades. But you know, a small loss, a big win, or break even. That's the only 3 scenarios that would happen with my trades. Okay, what's next? After that, basically what I started doing was just, you know, back testing all my different pairs. So I started on CHF JPY. You know, same thing, back tested the way that I'm trading, 30-30, 30-60, and what this was doing was also rebuilding my confidence again. And out of that, I ended up getting a 57% win rate. Fucking amazing. 57% win rate with backtesting with the strategy that I'm using now. So my confidence has been rebuilt. I just need, you know, that's how I came to the understanding that I'm just in a losing streak, because no matter what skill level of trader you are, I've learned when I'm in a losing streak, it feels the same way as it did when I first started. Although I'm losing less because I understand my risk management now, and understanding, like, you know, protecting capital is the most important thing. It still feels the same way when I'm in a losing streak or when I lose money. Like, it's never going to change, and I've come to terms with that. And so it's just being aware of myself and the way that I'm feeling when I'm trading. that will save me. So on the 13th, which was literally like Wednesday, I think it was, general strat. So this was when it really started hitting me, and this is when, we have a couple more pages, but this is when my discipline started really hitting me, like where in my head, when I was really starting to think to myself like, oh, I don't want to trade. But yeah, like that's, being like, oh, I don't want to trade, that kind of like a lapse in discipline. I didn't, I didn't stop trading like I was. I still kept executing in my head though. Like I just really didn't want to take those trades. Like it took a lot for me to go all the way to, push through. It took a lot for me mentally to push through that and to, still execute my trades how they should have been executed. And I'm very glad. Like I don't really care about the outcome. I was just really happy that I was able to keep executing and not let that affect me as much as it would have. So I wrote down on the 13th, general strategy backtesting for confidence. So, this is what I call it general backtesting. And what I mean by that is the same rules, the same way I'm looking at the chart, the same rules, everything is exactly the same as I would do it in a live market scenario. I just backtest that to rebuild my confidence. Whenever I'm going through a rough time in trading, when my confidence is starting to get low in my strategy, I'll usually backtest a lot. I'll spend a couple hours backtesting a couple different pairs just to build that confidence. I don't do that every day like I used to. I pretty much do that, I would say like once, twice, maybe 3 times a week, maybe, if that. I don't backtest a whole lot anymore just because I understand that my strategy is working, and I'm just kind of like optimizing it through live market data, which, that's what these weekly videos are for, is for me to look back on that and to reflect on my data that I got, and so I can get better. I have another back test on here for a different pair, which was Euro CHF. After 100 trades though, I found that I don't know, I'm gonna have to re-back test this pair because I don't know if it was just a certain time in the market or what it was. But I got a 38% win rate, which is not profitable. So what I'm going to have to do is I'm going to have to I usually go back the past 2 to 3 months because that'll give me 100 trades, because I only want to backtest the past 100 trades because TradingView is weird. TradingView is weird in terms of like, the market scenarios are going to be way different than they are now. So the volume index could be different. The structure, it's not going to be 100% as if it was live. So, you have to take those backtesting results with a grain of salt, but you can use them as a general base to, find a profitable strategy. And for Euro CHF, I think it was just because the volume index is because Euro CHF just isn't as volatile as, say, AUD JPY or AUD CAD. So I think I'm gonna have to backtest a couple of these different pairs. I'm gonna backtest all of my pairs, and we'll see, if any of them are not profitable or not. Basically what I found with backtesting the CHF pairs is just essentially the volume index isn't as much as the JPY or the CAD pairs. So JPY, the CAD, and the Euro pairs are pretty much, and the NZD pairs are going to be pretty much the only ones that I trade, just because of all the results I've been backtesting and everything. That's what I found. So same thing with Euro GBP. I didn't even go to 70 trades because I ended up going to 70 or 60 trades, but I only won 10 out of those 60 trades, and that gave me a 16% win rate. And in order for me to get a 50% win rate, I'd have to win 40 out of those next 50 trades, which is just super unlikely. So I stopped backtesting. I wrote that on my board. This is probably going to be a pair that I need to backtest again. Euro JPY, I ended up getting a 43% win rate. Taking into consideration what this could be is just at that time in the market, or it could have just been a time, when TradingView was being all weird for me, because sometimes I have to refresh my page because the pip counts will be different, all of that kind of stuff. And then, so the last note that I put in was on Thursday or Friday. So I said maybe my break and retest setups and direction of trend would be better. Because what I was thinking was, since I take two different types of setups, one of them I call the break and retest, and then one of them I call the reversal pattern. It's not really a reversal. What it is though is, say that price created, let's just do it on here. So actually, this is a perfect example on Euro USD. So my reversal patterns per se is like, okay, well, I see that price broke this structure, but it created new supports right here. Like, you can see that price pushes down this red candle and then up this blue candle. So there's a support. So what this did was created this gap of liquidity right there. And so I'm taking this. I know that the trend is overall bullish. So there's an untested structure right here where you can see this buy limit. You can see that it literally just taps it barely. Like, I don't even think I got in this trade because of spread. But it literally taps the entry and then pushes up to 30 pips. Now, that's what that is. That's what my reversal patterns are. And then you got the regular break and retest continuations, the breakout trades, just like everybody else trades. And then the final note that I wrote down for myself after all of my testing, after all of my ideas to be able to be confident in one thing, I wrote down, continue what you're doing, only trade the pairs that pass the 50% back test. So this was also kind of a side note. I still need to do more back testing. But I'm going to be back testing this weekend all of my pairs again. And I'm going to run through them. And if they don't get a 50% win rate with my strategy and back testing, they get cut from the program. Like, I'm not trading them anymore. Now, I might, later in the future trade them, but if they are not going to pass my 50%, I'm going to cut them, focus on the ones that do have 50%. If I still want to trade those pairs that I kicked out of my watch list, I'll keep continuing to backtest them and find out what's going on with them so I can understand why should I not trade these pairs, or why should I trade these pairs. The JPY and the CAD pairs look like they're just going to be the best fit for me for the way that I trade. They have that volume index that I like. But yeah, that's pretty much the journal, and let's kind of jump over the charts real quick and go over some trades that I took this week. So, I tagged the ones with the dark blue are the ones that we're going to go over, because all of these other ones, oh shit, that was USD JPY, yeah, that I should have tagged that one. But yeah, so here was a trade that I took on UJ. So this week the trend actually reversed at the beginning of the week. So for the I took a couple losing days, and blah blah. That's kind of there. But yeah, so this was the last trade that I took on UJ this week. You can see the trend was bearish. This is a daily low right there. The daily candle closed below that low, so I know that the trend, the big boys in the market want to push it lower because we closed below that level. On the daily level, on the daily support, we closed below that level with a daily candle. Now, I had the trade off of this structure right here, but what I do is I don't leave my, I update my charts because, I'm not doing any active trade management with my trade, so I can just move on to the next trade after I execute it, which is, why I like my strategy. That's just me personally. But yeah, this one pretty much fucked off the zone right away, and it pretty much we ended up having our take profit 2 hit. You can see that my take profit 2 was 60 pips, and 60 pips is right there, so that was hit. USD CHF. So with this pair, you can see that this is like my reversal scenario that I was talking about. So we got a break and retest right here. Not really a retest, it kind of pushed through that level and continued up, but this was at 5 o'clock in the morning. I was asleep at that time on this day. And yeah, so basically this was a loss because it rejected off of this level but never hit my take profit. So there's that was a loss. The same thing with this one, like, this pair just kind of reversed. This week was very bad, but this is kind of my idea for my reversal, is like maybe my break and retest would be better, because I don't know if cumulatively overall if my reversal trades work out or not. So maybe my break and retest, I don't know, that's still something I have to back test. But yeah, pretty much that was a loss, so that's fine, it's whatever. We went over Euro USD. This was a trade, pretty much like sniped the entry. I don't even know if I got in, and it kind of like took off. Euro JPY, you can see that it was a sniper entry, and kind of, we had both of our take profits, and I could have held this. If I held it, I could have gotten a 1-to-4 out of that, but I've noticed more times than not in my back testing that 1-to-4 risk reward ratio only happens like literally less than 30% of the time. For me to have a higher win rate, because my patience is super low, to have a higher win rate, just sticking to 1-to-2 risk reward ratio is best for me. Maybe I can up that in the future, but a 1-to-2 is best for me. And then CHF JPY, you can see that, I don't know why, yeah, what the hell? Oh, that's because that's not 30 pips, lol. I don't know what happened there, but basically, I mean, you can see that the trend is bearish on the daily. You know, there's a daily low. You can see the daily low right there. We broke it with this daily candle, had a pullback, and boom. I mean, I just had a couple entries. I had an entry there. I had entries throughout here through this consolidation area. I had an entry right here. I think that was last week though. No, that was the beginning of the week on Sunday. And yeah, basically, like, you can just see that pretty much push to take profit too. And then these other pairs they were just updated. I was just waiting for, you know, trade setups and whatnot. This pair I was back testing. This one I didn't back test yet. Back tested that one. Back tested that one. That's why they're empty. You know, the charts have nothing on them. But yeah, that's pretty much it, guys. I mean, like, it's literally not even anything interesting. You know, like, it's the same stuff I've been going over for the past fucking, like, month or however long I've been uploading videos every week. But yeah, that's pretty much it. I mean, I learned quite a few things. This week was a very big test of my discipline and seeing if I can stick to that, and I was able to, so that proved to me that I didn't have any psychological errors this week. You know, I did a lot of back testing so far, and I have more back testing to do, just because I like back testing and, you know, I want to get better. But what I am seeing through this week's results, what I learned through this week's of results, is that they're one of two things. Either it's the market that's different, you know, the market is just not conducive to my strategy right now, which is totally okay. You know, that happens. That's trading. That's normal. So I don't have to worry about that if that's the case. Or number two, which I think it's case number two, that some of these pairs that I'm trading are just not profitable with the way that I'm trading, and I'm gonna have to figure that out. And I'm pretty certain that's what it is, because I've been noticing that some pairs are more profitable than others. Some pairs have a better win rate in backtesting than others. Like Euro CHF has a 38% win rate. Euro GBP had a 16% win rate. I don't know if it was just a specific time that I was backtesting. You know, like, I don't know if I rewinded too far, or if I was trying to over optimize, or if I was trying to do any of that, like, for that specific market set of data for that, you know, that couple of months that I tested. I could have been over optimizing for that. It could have just been like a couple months where the period that I was back testing, where I got my 100 trades from, it could just be a time where the market was consolidating and wasn't conducive to the strategy at that time. It could be so many different scenarios, but it could be that those pairs just are not good with the strategy that I'm trying to execute on them. So what that'll do is it'll minimize, you know, if I figure that out, let's say I knock my pairs down from 20 pairs down to, let's say, 10, instead of risking 0.1% per trade, I'll be able to double my lot size, because now that I'm trading half of the pairs that I used to trade, I can double my lot size. I'm gonna have to figure out the percentages, you know, because if I take off like 3 pairs, you know, 3 pairs that aren't profitable, I would have to upgrade my whatever 20 or 200% divided by 3% is, you know, like, what, or 30%. So I would have to figure that math out for my risk management to see what I can up my lot size to. But yeah, that's pretty much it, guys. Like, literally nothing interesting, same old shit. But that's kind of what I learned this week for trading. And yeah, I'm really excited for next week and see what that brings me. But anyways, that's been kind of the video, going over my results, reviewing my trades in my journal. And yeah, just remember, guys, like, I'm not trying to teach you anything. This is just a video for entertainment purposes. I'm only reflecting on my own personal data, going over what I learned every single week. Keep that in mind. I'm not trying to teach anybody anything. I'm not trying to say, oh, listen to me because I'm trading fucking a live account or whatever. No, like, this is for my own personal use to be able to get better, and for entertainment purposes. And maybe somebody could be like, wow, you know, that was something that I liked that he said, and then they put that into use, or keep that in mind or something. I don't know. But yeah, that's pretty much it, guys, and I'll see you guys next week.